To Daily Mortgage Rates Live with the Mortgage Calculator. We will get started here in just a few minutes, so hang tight with us. Good morning, everyone. We did put the chat up on the screen, so feel free to drop comments in there. I see some people already commenting. We're just waiting a couple minutes to go live on all the different platforms. We are streaming live on YouTube, Facebook, Instagram, and LinkedIn. So give us a chance to get up and running on all the different platforms. In the meantime, go ahead and drop a comment there. Hope everyone's been having a great week so far. We'll get started here in just a moment. All right, it looks like we are live on all the different platforms, so we can go ahead and get started. We'll take the chat off the screen, but feel free to keep dropping comments there as you tune in. So, welcome everyone. My name is Kyle Hiersche. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hiersche. What we do on this show every day is go through the live rates for different programs, and then we do a deep dive into a different topic every day. Today's deep dive is going to be 1099 loans. Now, we are a correspondent lender that specializes in non-QM loans, this being one of them. So we'll do a little deep dive into that here later. But first, Nick, let's go ahead and pull up our pricing tool so we can see what the rates are looking like this morning.
Alrighty, let me go ahead and switch my screen and we will get started. So as Kyle mentioned, this is our pricing tool. So this will show us the general rates for our general programs today. It is June 8th, just after 11 a.m. Eastern. So most of the program rates are live here. This will show us the rates and the APR, including all the costs and fees. If you would like a full loan estimate with the itemized fees broken down, please get with one of our loan officers. We have over 300 licensed loan officers in 24 states for primary and second homes. And we can do our DSCR business purpose loans in 44 states. So a lot of opportunities there. Now, for our tool here, we will compare our basic programs as we do every morning. We'll set up a standard scenario of a 400,000 loan amount. We'll set the LTV to 80% loan to value, 20% down payment. We'll set the desired price to 99. That means we're going to ask the computer to find the best rate at one discount point in cost, which is typically the request. We're going to compare our different loan programs here. We're going to start with conforming conventional, and then we'll check out our FHA rates, and then we'll pull up our expanded guidelines, aka non-QM, where we have over 5,000 additional loan programs using alternative income. We don't do VA live. That's only for our active service members and eligible vets. So if you are eligible for VA, no problem. We'd be happy to quote it, but not everybody is, so we don't do that live. And same with USDA. That's only for properties that are in a USDA eligible area. If you do happen to be shopping for those, let us know. We'd be happy to quote it, but not everybody is, so we don't do that live either. So we'll start with conforming conventional. We will set up the same scenario we use for all our demos: a purchase, 30-year fixed loan, standard loan, primary occupancy, single family home, one unit, state of Florida, county of Miami-Dade. And for all the demos, we use an estimated FICO score of 760 today and an estimated debt to income ratio of 40. So with these basic settings, let's see what the rates are like this morning. So about the same as it was yesterday, just a touch higher. So 6.99 rate being the best option the computer found for 0.875 discount points in cost, and a final APR of 7.153. So remember, we use APR so that we can compare across programs. That includes all the costs and fees and everything, so we can compare apples to apples. So this is the conventional rates this morning, 7.15, just a little over 7. So let's pull back up our tool and compare that to our FHA options. Set this back to 80. FHA does allow a little more leniency on credit items, and debt to income, but we will set everything exactly the same as the other demo so that we can compare apples to apples here. So for this morning, the FHA looks like that went up a tad too from the other day, but the best option the computer found here, 6.125 rate for 0.75 discount points and cost, and a final APR of 6.709. So in this case, and many times that we see for this customer in this scenario, FHA is actually a little bit cheaper. Typically that wasn't the case. For this scenario, it is. So I definitely recommend our customers that qualify for both conventional and FHA, check out both options side by side. In this case, the APR is actually a little bit cheaper for this scenario. And remember, APR does include the upfront mortgage insurance and yearly mortgage insurance, which is required for FHA. So that does allow us to compare apples to apples. Now, where we love to specialize is if our customer doesn't necessarily qualify for FHA or conventional. Many other banks or lenders don't have other options, but we love to present our non-QM programs. So we'll set up the same scenario. And this time we'll click on expanded guidelines, aka non-QM. This is where we can use alternative income, and we have over 5,000 programs beyond what the typical lenders have there with the conventional options. So everything else will stay exactly the same as our other demos, so we can compare apples to apples, but we do have to select an income verification option here under non-QM. So full doc is what we use for conventional and FHA, so typically we would choose non-QM to select a different option here. So we have some general options. We have asset-related options. We've done some shows on that. Business bank statement options. We have our investor options for investment properties. We'll talk about that in a minute. We have our personal bank statement options. Those are our most popular. RSU, stated, VOE, 1099 P&L, no income at all kinds of different options here that we can select from for our non-QM options. But for our demo, we always select personal bank statement 12-month program. That is our most popular for a primary home. And that's for our self-employed borrowers. Many times our self-employed borrowers, when they submit 2 years of tax returns, have various write-offs and other things that may affect them. So typically this will allow us to either qualify them where they would not qualify or qualify for much more income and get the home they really want. So instead of using 2 years tax returns, we're simply going to use their last 12 bank statements to determine a debt to income ratio, in this example, of 40% using just the cash in the bank, no tax returns involved. So most of the times our self-employed borrowers qualify with double, triple, quadruple the income that they would with their tax returns and therefore qualify for the home they really want. So with these basic settings, let's check out our bank statement rates this morning. So some awesome options here. We love when the non-QM is very comparable to the conventional. And in this case, it's almost identical. 7.375 rate, 0.75 discount points and costs, and a final APR of 7.433. Remember, conventional for the same scenario was 7.15. So today, non-QM and conventional are even closer than our last couple weeks of episodes. So definitely recommend anybody out there shopping, maybe a little bit on the borderline. These programs could be great solutions, especially if you need a little bit of extra help. And they're really very comparable in cost, not much more cost at all here for this program compared to conventional. Also, if we scroll down, you'll see we have hundreds of options here of different bank statement options. Some of these may allow credit events and other foreclosures, things like that. So please get with our team. They can find some of these options that will fit for you. There are a ton of options and a lot of flexibility once we get into the non-QM. So this is what we love to do. Now, before we get into our 1099 example, which is obviously a version of what we're looking at here, we want to do the live demo, as we do every day, for investment properties. So we love to work with investors here at the Mortgage Calculator, whether you're a first-time investor or a seasoned investor. We have some great options. So let's pull those up here. We'll set up the same scenario as before, 80 LTV, 20% down payment. And we're going to compare our conforming conventional investments with our non-QM investment property options. Remember, FHA, VA, USDA, not applicable for investment properties. So we're simply going to compare these two. We'll start with conforming conventional. Everything stays the same as all our other demos today. The only thing we've edited here is the occupancy to investment property. So with those settings, let's see what the investments are looking like. Oh, it's a pretty good option, actually. Very comparable to the primary here, 7.125 rate, 3.625 discount points in cost. Many investors would like other options there. And a final APR of 7.379. So remember, the conventional primary was 7.15. Here we have a conventional investment for 7.379. So that's a pretty good deal. But many of our investors would like a higher rate option with less discount points. Notice in this demo, this is $14,500 in this case of cost to get to that rate to use these conventional loan programs, because the GSEs that operate them have added price adjustments for investments. So many of our investors ask for other options. That's where we love to present our non-QM programs, where we can go a little bit higher in rate and save a ton of money out of pocket on the discount points. So for our final demo, we'll set it to investment again. We'll set it to 80 again. And we'll set it to expanded guidelines non-QM for investment properties. Now, our most popular option for income verification for investments is going to be our DSCR program. That's only for investment properties, and that's because it doesn't require any income or employment or anything from the borrower. We're simply going to use the estimated rental income from the property to determine a DSCR ratio, debt service coverage ratio. So if the monthly rents from the property can cover the monthly expenses, the PITIA, the monthly payment of the mortgage, that is a ratio of 1.00 or higher, aka the property cash flows on a monthly basis. We even have options for DSCR ratios under 1.00, where the property doesn't quite cash flow on a monthly basis. For the demo today, as we do every day, I will delete this just so we can see all the different options pop up. And the final thing we must select is a prepayment penalty that is standard for non-QM investments. 3 years is always standard, so that's what we use for our demo. There are options for no prepay. That does cost more, and that limits the amount of loan programs. Not all of them offer that, so we don't do that. And 5 years is an option that saves us a little money when it's available, but not all loan programs offer. So to do the most common and show us all the options, we always select 3 years for the demo. So with these basic settings, let's check out the DSCR rates. So great option here at the top. Obviously the best, 7.875, a little bit higher rate, but we've saved the discount points, 0.725 discount points. So our investor, instead of $14,000, now can get this property with just $2,900 in cost here. So very comparable. Most of our investors select these DSCR programs when they compare it to conventional because of the flexibility and to save cash out of pocket. The APR here of 7.932, obviously a little bit higher for a non-QM investment property than a conventional, but a lot of flexibility. Most of our investors that have multiple properties can cash out 1 to 5 properties to purchase 1 to 5 more properties and do all the loans at the same time because there's no income, no employment involved. Very easy type of loans to do, especially for our investors. So tons of different options here. You'll see there's different DSCR ratios for different programs. There's some down here, if we scroll down, with different prepayment penalty options. Please get with our team. They'll find which of these fits best for you. Some of these may allow short-term rental income if you're doing short-term rentals. All kinds of loopholes. We love to present these DSCR programs, so please get with our team, and we'll find the best one. Now, let me go ahead and get into our deep dive for today. I'm not going to be able to do the dual screen here, Kyle, so I'm just going to have to present in the same way. Let me go ahead and go to my tabs here.
That's fine.
And we're going to talk about 1099. So I don't really have I guess I could slide this up here. So let me just talk about it for a second first, and then I'll pull up the quotes. So Jose's absent today, so I'm stepping in for him. He actually has the quotes here, so I'm going to present the quotes. But the 1099 programs are a subset of non-QM, amazing subset of non-QM. We can use them for investment properties, second homes, and primary homes. So a 1099 loan would be a loan where we base the income off a 1099. So this is for our borrowers that have a 1099 gig. Think of a realtor. Typically, all realtors receive a 1099. Think of an insurance agent. Many times, insurance agent receive a 1099 from each agency they work with. Uber drivers, DoorDash, all the gig economy type stuff, right? Uber provides a 1099. All those different companies provide 1099s. So these are great options, especially with the way of the world is working now after post-COVID type of things, where the gig economy is bigger than ever. So 1099 loans, a subset of non-QM. We can use them for any type of purchase or refi for investment, second homes, and primary homes. But I'm going to pull up a couple examples just to show the general ways we can use it and kind of the maximum LTVs and whatnot. Remember, these are non-QM programs. There's no such thing as a 1099 program for conventional. So these are all non-QM as we saw in that demo. But instead of bank statement, this is when we select 1099. There are a bunch of options here. So we're going into these specific options. So let me go ahead and pull this down and we'll get into the first one. So the first option to present here is a primary purchase using 1099s at 90 LTV, 10% down payment. So some great options here for our primary borrower buying a primary home and being able to use their 1099. Remember, there is never any PMI on a non-QM loan. So this is 90 LTV, 10% down with no PMI. So what you see is exactly what we're going to get here on this loan. So if we scroll down here to the rate options, remember this is a demo with a $500,000 purchase price, $50,000 down payment, $450,000 loan amount, and we have some great options from 9.625 for a little bit of cost there, $5,600, but we can buy it all the way down to 8.625 for 11,000 there. That's a couple points, about 2.5 points. So some great options here for a super high LTV non-QM program, no PMI. So some great options here. There are some better, more standard options though, once we don't have to include those extra fees to cover that PMI. Obviously, this is the maximum LTV, 90% LTV. So let me present the more standard option with the more reasonable cost that you guys are probably going to be more attracted to. If we can get 20% down payment, now we're looking at some amazing rates that even beat conventional in some case. So this is a 1099 at 80 LTV, which is more standard. Obviously, it's not pushing the limits. And we're just using a 1099. We're able to do a 7.5 rate here for a actual lender credit. And we can buy it all the way down to 6.875 for just less than 2 points there. So some amazing options that we have once we get into the more standard LTV range. But we can still push it up to 90 LTV here for a little bit more cost, as you can see on this chart. Now, as I mentioned, we can use it for second homes. Don't have any examples there, so feel free to quote that for our team. And if you need a quote, please feel free to reach out. But what really gets me excited here is investments using income, right? So we love our DSCR options. Sometimes we can save a little bit of money for our customers that do have a 1099 to supplement some income with that DSCR and turn it into a 1099 program, which sometimes saves us a little bit of money and allows us to go over the LTV that we might typically hit with a DSCR loan. So in this case, we have an investment purchase for 85 LTV, which there are a couple DSCR options, but this allows us to have a more realistic option once we add some income. So 85% LTV purchase for an investment property, 1099, and our rates here a little bit higher because we're obviously pushing the limits as always. 10.25 rate, still a couple points of buy down, all the way down to a 9.875 rate. It's about the maximum buy down we can do. It's approaching 3+ points in buy down there. So some great options to really stretch our LTV. 15% down payment are pretty amazing options. And finally, we'll do our investment purchase with 80 LTV. That's a more standard option. So at 80 LTV, this is a more realistic option that will allow us to get the best rates and terms, as you can see below in the preview. So 80 LTV, again, just using a 1099 or multiple 1099s if you got multiple 1099s. Remember, also, I guess I didn't mention, we can use 100% of the income typically from the 1099 because it's showing your gross income for the year. So that's typically what we'll use. Some of them may allow a factor, but most of these just use that. And boom, here's a big stack here of rates, but some amazing rates here. Again, it's 20% down, so 500,000 purchase price, 100,000 down for an investment property. But smoking rates here, guys, from 8.375, we can actually get a lender credit. So that's going to blow most of the DSCRs away there to be able to actually get some credits and stuff. So if we add a little income, we can get a little bit of flexibility there. And we can buy it all the way down to 6.99, which usually isn't quite as low as we can buy it down with the DSCR. So when we add some income to our investors that are looking, DSCR is great, but if they do have some 1099 income, we can save a little bit and stretch a little bit more on the LTV. And 6.99 is absolutely amazing rate. I believe this is right around 3 points in buy down here. So some amazing options that we have here. Whether it's a primary, second home I didn't pull up, but it'll be obviously in between these prices. And we can push the LTV limits, which is kind of the main thing. No MI, PMI on any of these. So great options here. Definitely recommend for our MLOs out there that have borrowers that are looking for different programs. If they have a 1099, these can be some of the easiest programs because there's really not much documentation we need besides the actual 1099. One piece of paper, take the number off it. Very, very simple, very, very straightforward. So not a lot of fancy math to do. Don't have to get 12 bank statements and letters and all that. You just simply get the 1099, do your math. Very simple. So definitely recommend. Don't overlook the 1099. It is a little more expensive than bank statements. When we do the bank statement demos, you'll notice they're a touch cheaper. Obviously, it's better pricing than DSCR. So if you want to do a DSCR, definitely present your customer. They have a 1099, say, hey, here's your DSCR. We'd be happy to do this. Here's our 1099. If you add a little income, we can save a couple bucks here and there. So that's how I like to present to my clients. Definitely love to present all the options for our investors out there, comparing DSCR to adding a little bit of income on them. 1099 could be probably the easiest way to do it since it's just one piece of paper. Doesn't really add a whole lot of documentation and extra work to the process there. So I don't think we have any questions. You see anything come up, Kyle?
Nope, I don't see any questions. That was beautiful, though. Just once again, another option here in the world of the non-QM lending. So if you'd like more info on this, you can visit us at themortgagecalculator.com. We can pair you up with one of our 320 licensed loan officers across the country. We appreciate everybody tuning in. We do this show at 11 a.m. Eastern every single weekday where we go through the different rates and do the deep dive into the topic like we did today with the 1099 loans. So thank you, everybody, for tuning in. Thank you, Nick, for the demo. And we hope to see you all tomorrow for the next episode of Daily Mortgage Rates Live with the Mortgage Calculator. Everyone have a great day.
Thanks, everybody.